Okay, so you file an insurance claim for property damage or whatever, and you get that first check from the insurance company. It can be, oh, so tempting to keep that check, to spend it on something you want or something that you need, instead of using it for what the insurance company paid you the check for. On this week's Walk in the Park video, let's talk about what happens if you keep the insurance check. So with the cost of roofing materials, along with everything else, skyrocketing right now, the cost of doing a roof replacement is reaching new heights. It's not uncommon for even just an average size roof to cost $15,000 or more. That means that the checks that you get from an insurance company for a roof replacement are going to get fatter and fatter. So if you keep it, how is that actually going to end up impacting you now and in the future? So to talk about this subject, what we're going to have to do is assume a hypothetical example of a claim and an amount for that claim. We also have to assume that the policy coverage type that's governing the claim is replacement cost value and not actual cash value. That's actually a very important distinction, because on a replacement cost value claim, you get at least 2 checks. On an actual cash value claim, you only get 1 check. Now, we discussed what the difference is between replacement cost value, RCV, and actual cash value, ACV, in a different video, and we're going to link to that right up here. So click on that video. When you're done watching this one, click on that video so you can find out what the difference is between those 2 coverage types. But one thing that's very important to know for this video is that if you have an RCV claim, remember I said you're going to get at least 2 checks. 1 check is going to come to you at the beginning. As soon as the claim is approved, then the other check is going to come to you once the work is done and an invoice has been sent to the insurance company. That's very important to know. The first check that you get on an RCV claim is the total claim amount minus your deductible, which is your share to pay, and then they withhold the depreciation. Whatever is left over, that amount, that's the amount of your first check. Then the second check that you get is the depreciation amount. Remember those terms. I'm also going to make the disclaimer that I am not an insurance agent, obviously, and I am not an insurance adjuster. So if you want a much more probably accurate explanation of what the ramifications to you will be if you keep your insurance check instead of using it for the repairs, your adjuster or your agent probably could explain that to you much more accurately than I can, but it's probably going to raise some questions on their part if you ask them about keeping your insurance check. All right, so like I said, we're assuming that you're going to get 2 checks. The first one comes as soon as the claim is approved. That's the one that most people are tempted to keep, right? Because the second check that you get, that's to pay for the repairs that have already been done. Now, for purposes of this example, we're also going to have to make up a claim amount. So just to make the math easy, let's assume that the claim is $15,000, because like I said, that's really roughly about an average cost for a roof replacement right now. So one of the jobs that the adjuster has when he comes out is not only to determine the extent of the damage to your property, but what is the value of the repairs to your property, and also how old is the property that's been damaged. He has to determine that because he has to assign a depreciation amount to the claim. So let's say you have a 30-year standard laminate shingle. 30 years, that's just the product warranty from the manufacturer. So 30 years, and let's say that it was installed 12 years ago. So that means that it's 40% depreciated. So if your 30-year shingle is 12 years old and it's 40% depreciated, and your claim amount on your roof is $15,000, then that means that the depreciation amount that's going to get withheld is $6,000. Now let's also assume that you have a standard deductible, getting more and more rare these days, of $1,000. So here's how the money all shakes out. $15,000 claim. They withhold $6,000 of it for depreciation. They subtract your deductible, $1,000. So $15,000 minus $6,000 minus $1,000 leaves you $8,000. But remember, there's still that $6,000 out there. That's your money that your insurance company is waiting to send you. And what they're waiting for is an invoice showing that the work has been done and that the charge for the work is $15,000. Then they're going to send you another check for $6,000. So let's say that you decide that you want to use that $8,000 to buy something that you need, or you want to take a vacation with it, or you want to invest it in something. If you do that, then obviously you're not going to have paid a contractor to do the work. Therefore, you're not going to have any kind of an invoice to send to the insurance company to show them that the work was done. That means you are forfeiting the other $6,000, your depreciation money. Okay, so now you had a nice vacation, or you invested your $8,000, or you upgraded your car, or whatever it is you decided to do with that $8,000. Now, that's done, water under the bridge. Now let's fast forward a few years. So let's say 3 years later, you have another event. Maybe let's say it's another hailstorm, and it damages your property even worse than the last one. And so now you end up filing another claim. Well, your insurance company keeps records of everything pertaining to your file and your property and your account. So let's say you've got another claim 3 years later. Future adjuster comes to your house, and for your future potential claim, and he says, well, sure enough, you've got damage from this most recent storm. We're going to accept this as a claim. And, you know, in 3 years, inflation at the rate that it's going right now, let's say that your future claim is $20,000 instead of $15,000. However, Mr. Homeowner, we paid you $8,000 on a previous claim, and you never had the work done. So we are now going to withhold that $8,000, and you don't get it because we already gave it to you. But now your roof is 3 years older, so now there's more depreciation that has to be applied to it because your insurance company knows you didn't have the work done because you didn't send in an invoice. So they know that it's still the same roof. So now it's 3 years more depreciated. So let's say that it's 45% depreciated. Okay, so your claim is $20,000. The new depreciation amount is $9,000. Let's say your deductible is still $1,000. So that's $20,000 minus $9,000 minus $1,000. That's $10,000. Okay, so that $10,000 is the amount that they would give you on future claim. However, they also know that they gave you $8,000 on the previous claim, which you didn't use to get the repairs done. So now they're going to tell you basically, we gave you $8,000 before, which you kept. We're not going to give you that $8,000 again this time. So now your $10,000 on future claim is $2,000. So let's say that this time you decide, well, I better get the work done. Well, remember, the amount of depreciation is $9,000. When you add that to the only $2,000 that you got on the first check, because they subtracted out the $8,000 you kept from the previous time, that means that now to get your $20,000 roof redone, which the insurance company would have paid for in full, now you have $11,000 from the insurance company with which to get your $20,000 roof completed. So one of the reasons that I'm even bringing this up right now is because we've got a customer who has 4 buildings that all got damaged by hail. One of them is a large shop slash garage slash barn with a metal roof on it. The insurance company is paying him $37,000. That's the actual amount of money after the depreciation that he got in the claim, $37,000 to replace this roof. And he's decided he doesn't want to replace it. Well, that's his prerogative to do, but that could really come back to bite him in the future, to the tune of his insurance company withholding $37,000 from some future claim that he might have. So boy, I hope this makes sense, and I hope that if you are thinking about keeping your insurance money, like I say, that's your prerogative. I can't tell you that you should or shouldn't do it, but those are the implications. And again, like I said, if you want a more accurate explanation of how it would really work, you could ask your insurance agent, but that's probably going to set off all kinds of alarm bells in his mind. So anyway, if you've got any questions about your roof, maybe you need a roof replacement, maybe you need a repair, maybe you just got questions about how your insurance claim is going to work with your roof project, give us a call at our office phone number right here, 719-433-6991, or you can also visit our website. That's right down here, homesteadroofingcolorado.com. Please be sure to give us a big like, share the video, subscribe to the channel, click the bell icon up there so that way you get notified when we've got new videos. Oh, and YouTube thinks you're going to really like this video right here. Give it a click.